Hey everybody, welcome back to Chipstock Investor. We're going to be talking about Nvidia today.
Uh, yes, we are. This is too much energy for me,
Oh,
especially when it's coming from you.
it's a little next level. Let's just start with the key points after the Q4 earnings update. Are there issues with Nvidia's business model during this Blackwell ramp up? It's still early on in the accelerated computing or AI industry. We'll talk more about that and why that's the case. And is it time to sell any of our Nvidia position?
Yeah, it's hard to believe it's been almost a year since we did that video. Time to sell Nvidia stock. We'll review some of those important points from that video. So if you missed it, we did an extensive video on IP in the semiconductor industry about a month ago. And we did talk about Nvidia and how they have been able to monetize the data center, which is very quickly becoming the largest end market for semiconductors, for chips, not just in their core competency, GPUs or accelerated computing, but across the entire industry supply chain. It's really been an incredible story. We have early estimates from all of the hyperscalers, the big cloud providers. That's Amazon AWS, Microsoft Azure, Google Cloud, Oracle Cloud, plus Meta. Those are the primary customers for Nvidia. It looks like that trend is still very much going in high gear this year in 2025. So things are looking good for Nvidia, at least from that standpoint. But before we get to the actual revenue breakdown for the data center segment, let's talk about the sponsor of today's video, public.com.
That's right. If you're serious about investing, you need to know about public.com. That's where you can invest in everything: stocks, options, bonds, even crypto. You can even earn some of the highest yields in the industry, like the 6% or higher yield you can lock in with the new bond account at Public.
Yeah, that could actually be really significant because a lot of investors still feeling like interest rates could be headed lower later this year. So even if rates do start to come down, you do get to lock in your rate at that 6% or higher. It could be a great long-term deal if you're looking for some fixed income.
Public is a FINRA registered, SIPC insured platform that takes your investments as seriously as you do. Fund your account in 5 minutes or less at public.com/CSI and get up to $10,000 when you transfer in your old portfolio. That's public.com/CSI. This ad slot paid for by Public Investing. Full disclosures in the video description. Let's get back to our discussion on Nvidia's data center revenue. Here's the revenue breakdown for Nvidia since 2017. That giant green bar that you see is data center revenue. All the way back in 2017, that's when Google introduced the transformer neural network architecture. That was the start of something big. But it's really been about 2 years since the Nvidia data center inflection point. You can see that huge growth starting in 2023, and it's exponential now. This all culminates in $115 billion spent in 2024, fiscal year 2025, for data center alone.
And this is where we promised we would point out a couple of issues to be aware of. Not new issues by any stretch of the imagination. We've been talking about this for some time, but with booming growth like Nvidia has been enjoying, there also comes some very lofty expectations, and especially when there is so much riding on the data center segment now. So this chart that we put together with finchat.io, the green line tracks Nvidia's data center sales as a percentage of total revenue. So 90% as we enter the new year. And you may know that we like to track what we call Nvidia total PC revenue. So we made this custom metric with FinChat by adding together Nvidia's gaming revenue segment and the professional visualization. And this just a few years ago obviously used to be Nvidia's main breadwinner, and now just approaching about 10% of total sales. If you find custom metrics like this helpful, you can check that out on finchat.io/CSI. You can get your own pro subscription and make custom metrics just like this. But Kasey, the point here is data center is what is moving this business right now. And so whenever you have some change in the financial assumptions for the data center segment, it could wreak some havoc on ultimately what investors are expecting and therefore also the stock price, which is probably why so many of you are here. What's Nvidia's stock price going to do?
Here's the outlook that Nvidia provided for the first quarter of fiscal year 2026. They expect the revenue to be 43 billion, which would imply a 65% year-over-year revenue growth, but only 9% quarter over quarter. In red, we have highlighted that the gross margins are expected to be 70.6 on a GAAP basis and 71% on a non-GAAP basis. This is where we want to key in on that first point. Is there a problem with the business model during this Blackwell ramp up?
You can get a hint why this is an issue. So you said, Kasey, revenue expected to be up 65% year over year, but GAAP and non-GAAP net income only expected to be up 42% and 49%. That implies something is going on with the profit margin. Profit margin is contracting even as revenue increases.
With any new product ramp up, we would expect to see some dip in gross margin. That just makes sense. When manufacturing a new product, there's new equipment to be installed, new processes to get worked out. With that Blackwell ramp up, you can see the decrease in gross margins, currently at 73%, and they're expecting it to drop another few percentages in Q1. Now, with that said, they do expect that the gross margins will return to the mid 70% range later in the year. But when exactly will that happen?
That's a question analysts asked multiple times on the Q&A session during the Q4 report. When will we see a return to that mid 70% range? Is it going to be in Q2? Is it Q3, Q4 this year? Because in addition to Blackwell currently growing its sales base and dragging the gross margin down, we also have Blackwell Ultra that will enter production the second half of 2025, calendar year 2025. Is that also going to be a drag on gross margins when that enters production? And then after that, we have Rubin, and then Jensen Huang said we'll be getting a hint of the next computing platform at GTC here later in March in just a few weeks. This begs the question, Kasey, is mid 70% gross margin even a good expectation anymore for Nvidia going forward?
You're absolutely right. Of course, Jensen did make some comments regarding this ramp up and the shift to each different computing platform. Sometimes it's not a complete overhaul, so to speak. And so the ramp up is not maybe as aggressive in some instances. In addition to the shift in computing platforms, they also have Spectrum X Ethernet.
Yeah, there's really two different parts to Nvidia's networking business, which is reported within the data center segment. Quantum X is InfiniBand. That's the technology they got when they acquired Mellanox. And let's just say for all intents and purposes, this is getting degraded and going away in lieu of the newer Spectrum X Ethernet business, which NVIDIA very much has some competition. That's why we've been talking about Arista Networks. We had the video last Friday on that as well. And so it's not just Blackwell alone that's a ramp up issue for margins. You can see in Q4, the 9% year over year decline in the networking revenue part of data center. They do expect this to also return to growth starting in Q1 of the new fiscal year. So that's the good news. But as they make this transition to Spectrum X, moving away from NVLink 8 with InfiniBand and moving to this newer platform, NVLink 72 with Spectrum X Ethernet networking, we think this is another reason why perhaps the gross margin is under pressure. And it's perhaps time to start thinking about NVIDIA gross margins normalizing somewhere in the low 70% range versus the mid 75% range. Again, not a new issue. This has been coming up now for some time. How sustainable are those mid to high 70% gross margins? An issue to be aware of this year because that will be a headwind for NVIDIA's profitable growth, the actual bottom line, even as revenue continues to grow at a very fast pace.
Let's move on to our second key point. Where are we in the accelerated computing or AI industry? Are we still early on in this industry? Even though it seems like things have changed rapidly, we actually still have a long runway of growth. Nick talked about this in a recent video that we'll link right here regarding Arista Networks. talking about pre-training, post-training, and test time scaling or long thinking. Getting a computing system to get to that point, long thinking, is actually going to be a bit of a process.
Yeah, and each of these step ups in AI scaling laws requires more computing power, not less. And this was the point with DeepSeek that so many missed. DeepSeek proved this new scaling law, the test time scaling or long think law. It requires just more accelerated computing infrastructure to be installed. So, in a nutshell, pre training, you can think of if AI is like a student, pre training is like going through undergrad studies, post training is like going through a specialized program, maybe like a doctorate or an MBA program. And then that long thinking is like maybe taking like a long walk to think about a problem or taking time to meditate on something. And when we get to that last scaling law, this is where NVIDIA has been trying to make the point that DeepSeek is validating. It doesn't put them at risk because this type of very, very deep reasoning that these AI models are now only just at the beginning of being able to pull off, it takes sometimes upwards of 100x more computing power to make it all possible. So if you think more software is going to have more AI features embedded into it in the coming years, this is all great news for a company like NVIDIA. Yes, we have the gross margin issues to worry about right now this year. Revenue is not going to continue growing at 100% plus rate year over year. So slowing, or maybe you should just say normalizing revenue growth, a bit of a decline in gross margin, but it still looks like we are very much in the early days still of this whole accelerated computing and AI industry.
Let's round out this discussion with point number 3. When is it time to sell your NVIDIA position? We see 3 important things to keep an eye out for. The first one, big tech capital expenditures flatlining or declining. Currently, as you probably know, that is definitely not happening. Capital expenditures continue to ramp up for all of the big tech spenders. The second point, NVIDIA's revenue and guidance flatlining. We certainly haven't seen that happening yet either. And the third point, valuation looks absurdly high. So, does the valuation look absurdly high yet?
Well, I mean, this has been the argument for 2 years now, if not longer, if you include during the bear market, where the argument was still NVIDIA stock is still too expensive. Even though we were in a bear market and they had no earnings, of course it looked expensive. But, here we are, years later, still having this conversation. And at least as far as we're concerned and what our portfolio looks like and what its needs are, there's nothing out of the norm or out of the ordinary with NVIDIA's valuation that would make us want to sell any of it at this particular point. So we just plugged in a few simple numbers into a reverse DCF estimate. Reverse DCF. Remember, we are just simply trying to come up with some sort of expectation that gets us to fair value on what the stock price is right now, which is about $130 after hours after the Q4 earnings call.
We used full fiscal year 2025 GAAP earnings per share of $2.94, earnings per share compound annual growth rate of 30% for the next 2 years through the end of fiscal 2027, which will be the 12 months ending in January 2027. Terminal growth rate of 6.5% thereafter. Discount rate of 10% gets us to around $130, which is the stock price currently. Is that fair?
Yeah, that's the question. If you like using a reverse DCF estimate to try to gauge whether a stock is a good buy or worth holding still, or if things have gotten completely absurd and out of whack, out of alignment, this can be one good tool to help you make that assessment. So that's what we've done here. And looking at these numbers, we actually think things are looking more reasonable than ever, actually, for NVIDIA. And so we see no reason to sell our position. Now, that doesn't mean we're going to be buying. That's just us and for our needs. We don't need any more NVIDIA stock in our portfolio. If you've been with us over on Semi Insider, you know that we've been putting in a little bit extra work, especially in the last 6 months or so, to diversify our portfolio a bit more and raise our cash position just a little bit. So that is still where we're personally at. That's our look on Nvidia stock. We think it's going to be a great year in spite of there being some short-term growing pains, but everything looks good as far as we can tell.
Thanks everybody for watching this episode of Chip Stock Investor. Make sure you sub to the channel. Check out Semiconductor Insider membership. Link in the video description below. Just $10 a month gets you access to Discord server where we have all of our video notes, live Q&As, which we did one right after Nvidia's earnings. Lots of great benefits. Check it out. We'll see you again soon at Chip Stock Investor.
Trying to have a productive record session.
Ray is also excited about Nvidia.
Okay. You gonna do your high energy?
Let me do my high energy.